I flipped this to this, only executing when I saw this one entry signal. In today's video, I'm about to show y'all how you can do the exact same thing. Like always, before we get into this video, make sure you like, comment, and subscribe. It just helps reach more and more people. The more you interact with the video, the more people I can reach based off of your interaction. So, like always, I know y'all are ready to get into this video. I'm tired of talking. I already did enough talking in this video. You're about to see. Let's jump right into it. All right, so we're talking about our entry signals. Entry signals are extremely simple. You just have to have the understanding on candlesticks. So first things first, we have our bullish engulfing, bearish engulfing, bullish variation pattern, and bearish variation pattern. These are the signals that we look for after we have done our technical analysis. But before we even break this down, I want to explain to you all what is a candlestick. So on a candlestick, when we're looking at the market, right, you will see this long line in this body. You will see a long line and you will see this body. We have a bearish example and a bullish example. This line, also known as a wick, is showing you where price traveled. It didn't have enough strength to close, and then it retraced all the way down here. And what do I mean? So for example purposes, if we think about if we're traveling in the wilderness, right? It's a blizzard, it's a snowstorm, and we're walking on this trail. As we're walking on this trail, our tracks, we leave tracks in the snow, right? We see our footprints. So as we're walking, we get to the point and we see something and we don't like what we see in front of us. So what do? We stop in our footsteps, we turn around, and we go back where we just came from, leaving a trail, leaving a line, right? It's the same thing with trading. So when we're trading, price was traveling. It got to an area where it did not like, and then it started moving the opposite direction, going back where it just came from. And after price got all the way back down here, we then closed in this area, leaving this long wick rejection. So basically what a wick is telling you, it's like a telltale. It's telling on itself. It's showing us that price, the highest point was around here, but price wasn't strong enough to form this huge body candle closure up here. Instead, price didn't like this area and it pulled back all the way down here and closed around there, showing us the wick rejection. And then it's same thing for a bullish example. Price traveled all the way down here. It didn't like what happened in this area. It turned around and closed all the way back around here, right? If I go towards this right here, you can see it's the same thing. So in a bearish candle, when we're moving in a bearish trend, price is always going to open at the top of that candle because we're going down. So if we're going down, it starts at the top, it closes at the bottom. And then again, we see these wicks, but what is it telling us? It's telling us the highest point price went, but didn't have enough strength to close. It's showing us the lowest point price went, but didn't have enough strength to close. And then it's the same thing with bullish example, but it's vice versa for the open and close. If we're going up, if we're bullish, price is going to open at the bottom and it's going to close at the top because we're traveling upwards. So again, we see these wicks. Price is showing us the highest point price reached, didn't have enough strength, it closed. The lowest point price reached, it didn't have enough strength and closed. So we now have a better understanding on what a wick is in the market. It's just showing us where rejection is, where price got to an area, it didn't like this area, instead it left a wick, it left a trail telling us it didn't like it. Now when we're using or looking to capitalize on these candlestick opportunities, this is when it comes down to technical analysis. At this point in these videos, you should be well aware on how to do a technical analysis. The only thing we're doing are we're identifying if we're going up or if price is going down, right? Are we bullish or are we bearish? That's our technical analysis. And then after we find the trend of the market, the next step will be to find the area of interest, aka your support resistance, supply demand, order blocks, roof and ceiling. I marked all these down just to let you know they're all the same. There's nothing that's different about all these sayings. All these sayings are just fancy word, like supply and demand, fancy word. Oops, not roof and ceiling, roof and floor. When we're looking at all these words, support and resistance, supply, demand, order blocks, Those are the same thing as the roof and the ceiling. Support is the floor. Supply is the floor. Order blocks is both support, resistance, the roof, the floor. So when we're hearing support and resistance, supply, demand, think about your roof and your floor, right? If we're going up, right, and we hit this roof, what will happen? Price will get here, hit this roof, and then bounce back down. Get here, hit the roof, and bounce back down. I'm making sure y'all can see me. But say the moment we break through this roof, what happens? Price will break through the roof, and then price will come back down. The recent roof we just broke through, we will then come back down to use that roof now as support to then go towards the next roof, the next ceiling, right? And then vice versa. If we're going down, price is going to hit the support, bounce up, hit the support, bounce up. Once price hits our floor, and then we break through the floor, price will then come back towards that recent floor and treat it now as our roof to then continue its journey back towards the downside. As you can see, I marked off floor, support. Our roof is our ceiling. When we're looking at price, right, we can tell what? We see that price gets here, it hits our roof, it rejects, and then it bounces. It bounced all the way down towards our floor, it reject, and then bounce. Hit our roof, we bounced. Hit the floor, bounce, bounce, bounce. So what can we tell? We can tell that price is forming this ceiling where price cannot break through. It keeps bouncing. Price has formed this floor where price cannot break through. It keeps bouncing. But the moment price gives us a break of this ceiling, of this resistance, we will then look for price to come back down towards that ceiling to treat it as our floor to have the next continuation back towards the upside. But before we even look for that, continuation to happen, let's slow down. Why do we wait for the pullback? Think about it like this, right? Say if you're going to buy a new pair of shoes. The new pair of shoes just came out, or, they're the hottest on the block. Everybody talking about them. When they came out, it's at the highest point in the market, meaning that it's the highest price in the market because it's so popular. It's such a high demand for them. But what do we typically do? We would wait for the discount to take place. We will wait for price to drop back down so we can then buy that shoe to experience that same feeling like everyone else. Well, it's the same thing with price action. When price gives us a breakthrough of our roof and we reach the highest point in the market, we don't want to just get in and buy just because we see price going towards the upside and we have reached this high point in the market. No. Just, we don't want to do that. We're going to wait for the discount. And all the discount is waiting for price to pull back down towards this recent roof to treat it as our floor and then have the continuation. We're looking for the discount to get in so we can continue to ride this wave towards the upside. While people got, their pockets, some people got their pocket hurt because they're waiting at the highest price, we're patiently being patient and waiting for the discount price so we can still enjoy the fulfillment of getting the same shoe. Now, as price is giving us this pullback, what is our objective? Now it's time to find the area of interest. Well, we've already found the area of interest based off of the break of our roof. We know that this roof has to now get treated as a floor because price is above an area where we were bouncing off of. And if we break through our roof, what happens? We would come back down, treat that roof as support to continue our journey upwards. So this is what we will wait on. And so as soon as price taps now back into our area of interest, aka that floor, our next objective is to wait for our entry signal. Well, wait for that rejection candle, aka the entry signal. And since we're bullish and we're looking to buy the market, I will be looking for a bullish engulfing or a bullish variation pattern. As far as us waiting for the retracement to take place, and we are waiting for now the candlestick rejection to take place, what is it that we have to see? I want to see, as price forms this retracement, now I want to see the candlestick, depending on what time frame that we're on. Like you all know, the daily, 4 hour, 1 hour, 30, 15 minute, 5 minute, we have to wait on that candlestick to close. Meaning if If you wanted to enter a trade on the daily time frame, you're going to have to wait 24 hours for that daily candlestick to close. Because like you know, if we're on a daily time frame trying to analyze the chart, every candlestick that we see on the daily time frame represents a whole entire day, aka 24 hours. And then on the 4 hour, we will have to wait 4 hours for the candlestick to close. 1 hour, 30, 15 minutes, right? But as we're waiting, what I want to see is price will do something like this. Price will tap back into our zone, and then that candlestick will probably open like so. And as price is moving, it's moving. Keep in mind, let's go back into the blizzard example. We're in the blizzard, we're walking. Oop, I see something I don't like. What happens? I start to retrace the opposite direction. I'm going backwards. Boom. I stop here and I close out on my journey. Well, we were just left with this huge trail showing us where we went, aka where price went, did not like, and then left this huge rejection at our recent area of interest. So as price broke through our roof, as price came back down to now treat this ceiling as our support, we see price form rejection towards this area of interest, showing us a added confluence. Once we see a rejection towards our area of resistance slash support, and now we're showing rejection above this resistance level, this is good, because now the following candle I want to see a bullish engulfing. I want to see that next candle go and engulf this previous bearish candle, the bearish rejection. If we go back and we look, this has just taken place. We see this bearish candle work its way. It didn't like this area, pulled back and found this long rejection. And on that next candle, we have the decision candle, the bullish engulfing. Once I see this bullish engulfing engulf past my entire previous bearish candle, this is now where I would find my entry. I will have my stop loss just below, and my targets will be my next roof point. Meaning that once price broke through our resistance, we found this new ceiling where price found rejection and it bounced the opposite direction. We can then mark this off like so. And as price is showing us the discount, showing us the pullback towards this resistance, now treating it as our floor, and we found our entry based off of the rejection and then the bullish engulfing candle, we would have found our entry. Our stops will be just below our resistance level, and then our targets is just the next ceiling point, meaning that we're just targeting that new higher high. And it's important when you target your new higher high, make sure you're getting back at least a 1 to 2. I always say if I'm in a trade and I'm looking to capitalize on a position, I don't want to risk $100 to only get back $100. I'm looking to double my risk. So if I'm risking $100, I want to get back $200. Risking $200, I want to get back $400. This is why it's important to make sure your risk to reward says a 1 to 2. But if it does not, say you're targeting these highs and prices at a 1 to 1, that's fine. As long as we're getting a minimum of a 1 to 1 at the first target zone, meaning that once we find our entry, we found our stop loss, and now when we're targeting these highs, our risk to reward says a 1 to 1, I'm still taking a trade, because the only thing I need to do now is adjust my take profit until it says a 1 to 2. This is allowing me to see that, okay, minimum, I'm still getting back my risks that I put on the table. And then if I am correct about this position, I can see price continue my direction, pushing towards that 1 to 2, going to break these highs and then possibly come back down, treat this again ceiling as now my newfound floor, to then have the next continuation back towards the upside to do the same thing over again. So I always say look for 1 to 2, because if you're right about your 1 to 2, you can definitely squeeze out more profit, and then so on and so forth. And then it's just vice versa. This whole example is just vice versa for a bearish example. So now say if we're looking for the entry signal, but we don't get the engulfing, but we have this bullish variation pattern, what would that look like? Well, this will look like this, right? We will have this bullish candle close like so, where yes, we have the bearish candle form the rejection, but on the next candlestick, we don't see that engulfing, meaning that this new candle or our bullish candle did not engulf our entire bearish candle. that's fine. You just simply wait for the next candlestick. And then on this next candlestick, say we have that next bullish candle now go and form something like this. Not only is this bullish candle engulfing that previous bullish candle, but we're also engulfing this previous bearish candle. This is why it's called a bullish variation. We have two bullish candles, and on this last bullish candle, this is the candle that presents us with the engulfing, as you can see right here, engulfing past that previous bearish candle. After we see that, that's when we will find our entry, stops below, and then take profit will be those highs, right? Something like this. And then that's the bullish variation pattern that you will be looking for. And as far as for your take profit and your stop loss, you already see how I do the take profit. As far as the stop loss, you're simply just going to have to wait for the next video. I will discuss that more in depth and explaining you more in detail why that's important. But as of right now, I just want to make sure we focus on our candlestick confirmations. So now I'm going to switch over and get into a previous trade I took and show you the simplest way on finding setups. Again, I'm going to find my trend, find my area of interest, and then wait for my entry signal. So give me a second. So we have this previous trade, AUDJPY. We can see clear as day we got in for sales, right? So let's walk through this setup. How did we catch this setup? Well, first off, we have to identify the trend. We saw price was trending in this bullish trend. Price then had the continuation move towards the upside, breaking past these lower highs. And then price had a flip of structure, SOS, switch of structure. Why? Because we broke past our higher lows to go form new lower lows. We know when we talk about lower lows, lower highs, and higher highs, well, higher lows, if we see price break past our higher low to go form a lower low, mandatory, I know that we're bearish because lower lows only consist in a bearish trend. So as soon as I saw that, I then identified my lower high, I identified my lower low. And say you don't want to use these tools, right? Say you like the box tool more. Well, what else can we see? I see a ceiling where price gets towards these highs. We bounce and we bounce. I saw a floor where price got here. We bounced. And you can see previously price treated it as a resistance. And then also when we got around here, I see price form another floor where price got towards this area. And it bounced, and this didn't happen yet, but it bounced, right? So now I have my floor and I have my ceiling. And so after I saw price give me a break past my floor, I then just wanted to see price pull back towards this recent area of interest. I saw price treated as a ceiling before. I saw price treated as a floor when we're above, and I see price recently get back below. I want to see price treat this area as a ceiling again, my resistance. So as soon as price tapped back into, you can see the first rejection we had was around here. Price got here, it formed this highest point, and then it pulled back, leaving us with this wick, the rejection. And then we have that entry signal happening around here. You could find your entry on this bearish engulfing. You see where price had this bullish candle, and then price had this bearish candle engulfing my previous bullish candle. And if y'all look at the bottom of my screen, it is 7 o'clock in the morning. Perfect. This is in the time session we want to trade. I would have found my entry like so, my stops being just above like so, and then my take profit are my recent lows, aka that recent floor price has just formed. Say if I would have found a position right here, this first position, right? You see guys only bringing me back a 1.86%. I will simply just adjust this until it said 2%. And you can see both positions hit our overall target zone. But I didn't enter right here because I was waiting for a little bit more added influences so I can take this trade. You saw how price treated this area again as my ceiling, and then price got above and start treating this area as a floor. Price then got back below, came back to attempt to treat it as a ceiling once more. We've seen these rejections, and then we see this bearish variation pattern when we form this first bearish candle, second bearish candle, and on this third bearish candle, it engulfed this previous bullish candle, showing me my entry signal. This is when I found my entry, stops just above, and then I'm targeting my recent floor. And look what happened. We got back a 2.78% in return based off of us finding out the trend. We saw that we were bearish. My area of interest, I saw my recent floor get broken through. After I seen the break of my floor, well, I know if I'm breaking through my floor and I want to go down, price is going to break through my floor, come back to that recent floor and treat it as my resistance to then continue down. And that's exactly what happened. We broke through the floor, price came back, treated it as the resistance, and then had the continuation back down. And if we just look towards the left, we see that this was also a recent resistance zone. This floor was also treated as a ceiling once before. When price is below, we treat it as the resistance. When price is above, we treat it as the floor. Well, price recently just broke back below. How can I not use it as a resistance? You can. So that's what we did, and we were able to capitalize on this position. Give me a second. I'm about to show you guys a bullish example, and that's simply going to be it for this video. This is just showing you how to use your candlesticks as your entry signal after you've already done your technical analysis, you found your area of interest, and now you're just simply waiting for that bearish or bullish engulfing. Look at this, right? Same thing. We see price was bullish, and as price was bullish, what else did we see? We see price give us the continuation break of this bullish trend, breaking past our recent highs to go form this new higher high. And after price gave us this break, I can then mark off my higher low. Why? Because this is the last previous low point that presented us with the break of structure. So now this would be my higher low. And what did we just break out of? Well, I know we broke out of these highs, but what was the last structure within our overall bullish structure? Well, the last structure break happened to be here, aka that resistance zone. And then you can see this resistance zone, when price was below, we treat it as that ceiling. And then once price broke above, we start treating it as a floor, which is good. We see our higher low being here. I see my new higher high being here, aka my new ceiling point being here, because price got to this point, it showed rejection and then bounced off, marking this off as my new higher high. And then my last break of structure being here, aka now the resistance / support zone. And if I saw price use this as a ceiling and then price just broke through my ceiling, what can I expect? I can expect price to come back down, treat that ceiling as my floor, and then continue towards the upside. That is exactly what happened. Price broke through my ceiling and then came back down and start treating it as a floor. We seen the first rejection happen here, second rejection happen here, third rejection, and then fourth rejection. And then you can see we had this bullish variation pattern. We had the first bullish candle, and then we had the second bullish candle. And say if you wanted to enter here, we see this 3-bar reversal. Do your research on the 3-bar reversal. It's just a reversal pattern, aka an entry signal, so on and so forth. But we see that this bearish candle formed the rejection. We then see the bullish candle give us that engulfing past that previous bearish candle. So say if you wanted to enter here, you could have stopped just below, and then your target being these recent highs, your ceiling, and then boom. But what happened? You're only getting back a 1 to 1.19% in return. Well, you're getting back a positive return. You just want to get back a 1 to 2 to then give you more of a decent overall growth on your account. You just adjust it 1 to 2, simple as day, and look what happened. Price hit your take profit with ease. So it's like when my entry came, I got more of a, if you will, precise entry, quote unquote, based off of addict influence, based off of us breaking down a little bit more to find our entry on the 5-minute, 15-minute time frame. If you want to learn more about that, link in the description, join the Discord. But that's it. This is how you find your entries using candlesticks. Bullish engulfing, bearish engulfing, bullish variation, bearish variation. It is extremely simple. Trading does not need to be so hard. Identify the trend, find your area of interest, wait for your entry signal. Simple as can be. And if you want more of a precise entry signal, learn how to use top-down analysis. Top-down analysis allows you to correlate all these time frames in order to get more of a precise entry on the lower time frames at a higher time frame zone. If you want to learn more about that, I made a video called Time Frame Correlation. Go check it out, and it walks you through how to do that exact same thing. That's it for this video. If y'all enjoyed this video, like, comment, and subscribe, because stuff like this will be coming to the channel every week. Don't overcomplicate trading. It's as easy as you allow it to be. Trading is a hard skill set to learn. Why would you want to overcomplicate it by doing extra steps and adding extra terminologies when you don't need to? Only thing you got to do is find out which way the market is moving, find out where's a good area of interest to enter this trade, and look for that entry signal. Say if we're surfing, I'm on the beach, right? I'm a pro surfer. I'm on the beach. We are at the beach, and as the beach is forming these waves, one, I see that every single wave is going east, 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 right? I have 3 waves I just saw that are all going east. Would I catch a wave trying to ride it west? No, it would make sense. I see all the waves are telling me it's going east. Why would I try to go west? Identify the trend. Next, where would be a good area for me to jump in and ride this wave? I have to identify the peak of the wave. Where is a good zone where the wave starts to pick up? I have to wait, and I have to be patient, and I have to allow it to be formed. After you allow it to be formed, now, when is a great time for me to jump on my board and ride this wave back to shore? It's the same steps with trading. Is the market telling us we're going bullish, or is the market telling us we're going bearish? Now, after we identified that, have we seen a ceiling get broken through? Have we saw our floor get broken through? If we saw our ceiling get broken through, we simply wait for price to break through it, come back down, treat it as our floor, and once price starts to reject as the floor, we look for the entry signal and continue to ride that wave up. Simple as can be. So that's it for this video. Again, let me know if you enjoyed it, and I'm gonna catch y'all in the next one. Deuces.